Hello and welcome to another update video about Sandbox. So the Sandbox price is heading in the expected direction, yeah, but it is far away from a potential breakout. So let me explain here in a second. But we can obviously see here an upside of 6 to 7% in the last 24 hours. That is due to some unexpected news that we saw here, some upside. And Sandbox doing really well. But overall, in the grand scheme of things, if I zoom out, not a lot has happened. So I wouldn't consider this a major pump. It is basically, yes, a little bit of a breathing, right? But nothing too significant in terms of the price. I mean, a 10, 15, 20% upside, I would consider that a pump in the current environment. But just a 6 to 7% isn't major. Yeah, it is what we've also seen before here. But we had some news and that will certainly benefit the Sandbox in the long run. And that is also why the Sandbox is my favorite metaverse cryptocurrency. We've talked about it before, that I am more in favor of those ecosystem crypto or ecosystem metaverse cryptos compared to just a game, because a game comes and goes, but a Sandbox ecosystem which is being built with all these partnerships, that is something that can be more long lasting. Of course, there is never a guarantee, and everybody has to be comfortable with the cryptocurrency they are investing in. But yeah, we've got here the news that HSBC enters the metaverse through a partnership with the Sandbox. I find that quite interesting because HSBC is really one of the last banks I would have expected to cooperate with cryptos, to start with cryptos, or even to enter the metaverse. Yeah, so that is something really, really unexpected. I mean, this one of the most conservative banks, really. I mean, I think with my HSBC account, I couldn't even buy crypto on Binance. It's just horrible. But yeah, apparently they are opening. They are partnering with the Sandbox, and they want to get engaged with esports. They are buying virtual land, a plot of land, so in the Sandbox. So I find that very, very interesting, and just really wanted to put it out there. Obviously, the Sandbox has already a lot of other partnerships like Gucci, Warner Music Group, The Walking Dead, Snoop Dogg, and Adidas, and there will be probably more coming, and there are a lot of more, including Atari as well. So that is all benefiting the ecosystem, and we see the effect on the price today. Overall, in the last videos, obviously, maybe the longer term view, we talked about here that after the all-time high, I mean, back here, up there, that was back in November, we talked about an upcoming correction. The Sandbox was just massively overbought, and we are still seeing the effects of that correction play out. So we did reach, by the way, my target area here. That was the target area, defined here basically based on Fibonacci levels, and it did do the minimum it needs to do in terms of a correction. It made the lower low, it came below the wave A. That is all fine, yeah. It hit the 61.8% FIB level. That is the absolute minimum it needs to do in terms of a correction. Ideally lower. It did get lower, yeah. There is though no guarantee that the low is already in, but the Sandbox did the minimum it needs to do in terms of a correction. And from all the cryptos that I cover, it really came closest to an impulse here. So obviously when you reach a target area like that I defined, or hit a certain support level, in this case also the 200-day moving average here in yellow, that was back end of January, we came to that, saw a strong reaction to the support, and we have started to build a 5-wave impulse. Absolutely. I mean, this comes really close and can be interpreted as an impulse, which would mean if you see something like that, this is the first way out of a potential correction. This 5-wave move, 1, 2, 3, 4, 5. Hit obviously resistance here, and then an ABC started. So a 3-wave structure to the downside. This is bullish, this is looking good. But and also it hit exactly the target area here, and you can see how it is reacting to this target area. So pretty much still in this target area. That was the target area for that wave C. It perfectly got into it. And now, however, the price has struggled to get out of this target area again, yeah? And this is not so good. It is back below the 200-day moving average. It is also still below the descending trend line. And I think in the last video we talked about this target area here, and that the lower end of the target area, the support level, is really what should ideally hold. Now it didn't hold. The whole potential uptrend is not invalidated yet. It would only get invalidated if we get below 262, that wave C low. Because what the price could still do from now on is basically build on this and make it a 1, 2, yeah, and now a 3, 4, 5 to the upside, where you have another 5-wave pattern. So, but this wave 2 is only possible if the price is staying above 262. If it gets below, it's not actually 262. 263. If it gets below that, it would invalidate that first uptrend, and that would indicate that we are going lower here, and that this was not the wave C, that the wave C is still coming. But again, even in this scenario, that wave C is not allowed to drop below 257. That is that previous low here on the left hand side where we really started that uptrending wave. And if the price is dropping below that, this whole 1, 2, 3, 4, 5 ABC is basically invalidated. Then that's it. The thing is, we are approaching key resistance here, so you're still below this descending trend line, and I think we are getting very, very close here, and we're getting here really, really to a decision point. So you see the price heading further and closer towards that trend line here. That is a descending trend line. You also have this horizontal support here at, as I said, 262, 263. And you can see how we're moving into this apex. There is not much more space. Yes, maybe another week of sideways movement is possible, but then the price really needs to decide what it's doing, because it can either break above this descending trend line, and that is a downtrend that has been at play now since the end of November. You can see how many touch points we have here on the chart of that downtrend. So that is one point. So we are really, really at this key decision point here, and that breakout to the upside could lead to quite a significant price increase. You know that the metaverse cryptos, when they pump, they do pump, and we could then see a breakout here, and my first target for that would be the 345 level, that previous swing high. If we break above that, then we could get to 450. However, if that support line here is broken, I think then we can find some more support at 255, but then I would consider this whole starting uptrend is then over, and we can then find the next support at 230. That is actually the 78.6% FIB level, and I have to primarily expect that we are coming down lower because we are still in the downtrend. We are not in an uptrend yet. We are still below this descending trend line, and we are even below the 50-day moving average. We are below the 200-day moving average. So from all of that, especially as the price did not really find support, strong support within this yellow target area, it did go a little bit below that. That is also not a very, very bullish sign. And again, just to show you what is that target area built on. So it's basically here we had the 78.6% FIB level at 281. You still have the 88.7% FIB level down here at 272, but even that was we got below that. So not super good, and we just want that price to hold. And I can draw the fibs differently. If I draw the fibs like that, you can see that here, based on that, we found support at the 88.7% FIB level, but lost it a little bit as well. And also that is not a very, very bullish sign. The pump today, or that move today, it is good, but overall we are still below this descending trend line, and therefore no reason to panic. It's also not a super big pump, nothing that is comparable to anything that actually it is really comparable to anything that we saw here in the last few weeks. It is not major. The only thing that sticks out is a little bit that volume, but again, we had similar volume on the 24th of February. So again, after that drop, it was all bought up. So I wouldn't pay too much attention to this, but the news are certainly good long term for the Sandbox. The Sandbox or Sand is currently coming to a decision point. Really, this apex here, it's worth paying attention to that, because if we break above this descending trend line, that could be a long trade opportunity. I, in the current environment, definitely always recommend to wait for a retest. At least that is what I do. I want to wait for a retest. What does that mean? It means when the price breaks above a certain line, in this case that descending trend line, I want the price to come back again, flip it for support. That means come back to that level, touch it, and then with a volume confirmation, that means you see increased volume, to move away from that price again. And that would then be a signal to potentially buy. Not telling you to do it, that is up to you, everybody has to make that decision. But generally the message here for the Sandbox is currently prices from my point of view are very attractive. We hit the blue target area. The Sandbox made a lower low, compared to the wave A here from the 4th of December, which means it did the minimum it needs to do in terms of the correction. At any point in time we can now see moves to new all-time highs, which doesn't mean the downtrend is over, but it means the downtrend could be over. It has fulfilled the minimum requirements, and that is really as good as you can get it with TA. You can't really say how long it will take and so on. But we know now that the correction can be over, and that if we find our way away from here, there is a good chance we can move now, or we have fulfilled, well, we have completed the correction, because we also see a first impulse here, a 3-wave move down, but the price now needs to start higher, and then we can be more confident that the low was in. But everybody needs to decide for themselves when, if, how they buy. I am already buying, yeah, because I don't want to miss the low. That's my strategy. I am dollar cost averaging in, still leaving some money aside for potential further downside, because it is in no way impossible to move lower here. I think the 230 level would still be a realistic one that we could even touch if we lose here these support levels that we talked about in this video. But I think, the downside potential is much lower than the potential to the upside. Yeah, the risk to the downside is much lower, because now we have a potential low already in, or we are in the last meters of the correction compared to where we come from, which was around $8, $8.50. To be honest, the current prices are still fairly attractive in my opinion. That's my view here on the Sandbox. Hopefully you liked the update. If you did, please hit the like button, subscribe and leave a comment. And if you really like the content, then maybe check out the channel membership. Thanks a lot for watching. Bye bye.